So I want to explain to you one thing, the way the flow of the market actually works. I'm going to show you one quick thing. Let's start with one of the things I want to show you guys, which is ranges. Okay, who here depends on breakouts? And let me show you something about breakouts. Let me just open up MetaTrader. Might be easier. Okay, I use breakouts all the time. That's how I trade. Okay, I want to show you guys one thing. All right. Now, would you guys say this is a range right here? Okay. And what about this piece right here? What does this look to you? Well, we're going to get to that, Conrad, regarding fake breakouts. Okay. Pan on fire would use wicks too. Okay. So what happens is there's two mentalities in the market. One that says use the bodies. The other one says use the bodies and the tails. You know, so there's two sides to this. Okay. Now, if you're a person that says use the bodies, this is the area where you would consider the range to happen. It's like, hey, this is my confinement area, right? Okay, this is where the range is happening. Like we're unable to step out. This is just the tail. It just comes out, right? Everyone agreed that when you see a tail that comes out and it goes back in, it's not a breakout yet. Does everyone agree on that? Okay. So, and then where I have my arrow, did we have a breakout? Okay, that's when it actually first starts to break out. And at this point, what happens is majority of the traders, when I say majority, I'm talking about everybody out there practically. What they're doing is they're trying to buy this, okay? Well, it's not about taking out the previous high, Conrad, because what you'll see is the way the candle closed, it's a full-blown no tail on top. This combined with candlestick patterns and whatever you want to call this, if you even take a look at your indicator, it'll start showing you it's starting to go long. So everyone looks at this as, hey, it's leaving, and they start buying. What is this in reality? Okay, so step number one today, we're going to discuss probes. Okay, what is a probe? Okay, does anyone know what's a probe? Okay, this movement that you see here, a bit spiking north and coming back down, it's nothing but a tail. Take a look at the 4-hour chart at this very same location on 10th December. Now, how would you say your range is? Is that inside the range? Okay, so there's a fine line when it comes to ranges. Now, even if you take a look at this, you're like, I got this area as a range, but then you have this big tail. This big tail would be considered a breakout to many people on the 1-hour time frame. Where'd it go? Right here. Well, it happened to be inside. Okay. But you'll get probes like this where it spikes down and spikes back. Okay, this is nothing but a tail on the next time frame up. Okay, so that's probing. Probing happens quite often. Okay, the next thing, when does probing happen? Probing happens at moments when your indicators are most likely to get lined up. Okay, so what happens here? Markets are going long. Divergence traders are looking at this and they're like, hey, we have a divergence, we have a what is that? Inverse divergence. So they're looking at this as something is happening. Okay, and they look at this as it's the first time it's doing something opposite, and there's something that we can work with. But when it happens, it actually shoots north and it shoots back down, and this is very, very common. Okay, this is called probing. Yes, it's part of a consolidation. In the language of the trendy education, okay, the trendy education being indicators, and now the latest trendy education being price action. You know, everyone's on this new hype of price action. So basically, in this probing in the language of price action is called false breakout. Okay. we're not going to get into how to avoid probing and stuff like that. I'm trying to explain to you guys what are the methods that are coming in to stop you guys at, and how you can face these challenges head on. Okay. All right. Let's get this out of the way and let's continue. Next thing, when you guys buy and sell, okay, let me ask you this. I'm gonna list it in 3 categories, and you guys tell me if you're a number 1, if you're a number 2, or if you're a number 3. Number 1, okay, when you see the markets going into an area that you want to sell, do you look for where the sellers are sitting? Okay. Number 2, when the market reaches an area that you want to sell, do you look for confluence, that you want to see your candlestick pattern and your indicator or your strategy to line up, where 2 or 3 things tell you that yes? And number 3, are you trading in the side of a trend and you base your sell trade that's coming up that it must be part of a downtrend? Okay? We'll get a lot of 2s. We'll get tons of 2s. Okay? And the one that's the least amount in here, you can see there's 1 or 2 people who say 1. Okay? It's the same thing, right? 95% of the people in the market have a different reaction and 5% have a different reaction. Okay? What happens here is, take a look at here. When you see the markets flowing in terms of buying and selling and stuff like that, what do you see? Now take a look at this. The markets are headed long here. Okay, let me remove this indicator on the bottom so you guys can see this clearly. Now, when the markets are moving long here, people view this as, hey, we're in a downtrend. I'm not counter trend trading. The trend is my friend. Are you crazy? I'm not going to mess with it. Okay, that's one side of it. Okay, that's popular belief. Second side of it is, when it started to go here and started to turn around, okay, do I have a candlestick formation? Is my indicator saying oversold, overbought? Is my RSI crossing into my stochastics and into my parabolic SAR? And is my automatic EA from some trader in Afghanistan and Jamaica saying the same thing? You know, that's another way to look at it. And then finally, the last way to look at it is, at this area where I'm looking to sell or looking to buy, has there been interest before? Okay. What is support and resistance? When most people refer to support and resistance, people just look at it as a line, as a wall. But the theory behind it is, this price where the market has bounced from has been significantly important. Okay, just think about it for a moment. Why do people teach support and resistance? Would you guys say this is resistance right here? I mean, this is support? Absolutely. Absolutely, it's support. Now, there's 2 ways to look at support, right? Some people look at it as, I want to see my tails connect. Some people look at it as, I want to see my bodies connect. Okay? And if you do tails, this is not proper support. If you do bodies, it's not proper support, because then it looks like this. Okay? So whatever the reason may be, you get it wrong. Okay? And the reason behind that whole thing is, everyone is after perfection. Okay? Now, if you try to understand this aspect of losing the aspect of trying to perfect something, you will start to see changes, because the prices on my broker are different from the prices on your broker versus the prices on someone else's brokerage. So how can you find an exact area? And if you are afraid of your brokers stop hunting, how can you rely on an exact area? You must always rely on a zone. Okay, maybe you might find a mixture between the 2. Okay, where it's like, around here is where I'm looking for something to happen. Now you're working with the market. You're not doing price action. You're not doing indicator-based stuff. You're working with something systematical. Okay. Now, why does the market come down here, react, and goes back up? Well, because this is where the buyers were sitting before. They were interested and they pushed it up this high. When the markets came back down, they bought yet once again. And what do you know? Your highs are getting higher. This high went higher. And then after that, did your high get higher? Okay, what would you say about this one? Did your high get higher here? No, it went lower. What does that tell you about the strength of the buyers? Yeah, it's failing. It's becoming weak. So let's understand this properly. Let's use some logic in this. If my high kept getting higher and my lows kept getting higher, everything kept going higher and higher and higher until I reached this point where I see my highs got lower. What about my lows? What happened to my lows? Okay, my lows became higher. Okay, if I just wait for it for another 10 seconds, I will see the answer I'm looking for. Okay, no one has said it so far, but what most people will actually react to this and saying, okay, yeah, we're in a range. Okay, because we're so used to defining something that we see. It's like, I see this visual something, it's this, or it's called this, or it's called that. And if it's called this and that, we must do this and that. You know, everything's so rule-based where if I see this, I do this. If I see that, I do that. You know what I mean? Stick to the flow of the market. So now you're seeing the high is getting higher, and then the high became lower. This is what we call a backdoor. This is the first time the market starts to show a sign of turning around. Okay? However, it's incomplete. If you have the upper side, you need the lower side. So afterwards, the market actually makes a lower low, followed by a lower high. Now do you have some confirmation that the markets are going downwards? Okay, fine. As the market starts to react and it goes up again, okay, look at the degree the market has come down. Okay, it's come from here all the way down to here, all red candles. How much did we pull back into it? Okay, if you're a fib trader, how many percentage did we pull back? Okay, maybe around 50, right? What does a fib pullback tell you? Okay, let's see all the answers. What does a fib pullback tell you? Reversal, excuse me, reversal trend, census trend not too strong, downtrend, strength of a trend. Matthias, there you go, bingo. That's the answer. It tells you the strength of a trend. Take a look at this. If my trend is going down like this, and then it retraces like this, 23%, does that tell me my sellers are stronger or weaker? They're stronger. See, but we're so trained to focus on one method of thinking that if it reaches the 23 line, hit the sell. If it reaches the 50 line, hit the sell. Like, Jesus Christ, wait, you know, let it tell you what it's trying to do. Okay, so once it does this, it goes around the 50% mark and then it comes down. Does it breach its low? Okay, like you guys were mentioning earlier, does it breach its previous low? No, this upward momentum still has steam. Now, how many of you guys have seen my trendline webinar here at FX Street? Okay, one person, two people. Okay, take a look at this thing here. When I'm in a trend, okay, trends work just like a range, but tilted. A range may go sideways, a range can go in a flag, but a trend is basically, to me, it's a trend, it's a range, but tilted. So take a look at this. I would look at this as this is my range. Okay, markets has trading been inside this area. Now that it broke out of this area, do I look at that as a breakout? Now, people might look at this, okay, it must break out, it must do a test back to that area, and XYZ rules. Did it work? Okay, there is a fine line of understanding the flow of the market versus learning to just apply a set number of formulas, strategies, systems, et cetera, et cetera, et cetera. Okay, so when you look at this, you're like, the markets are headed downwards. But when it tried to go down, it didn't have enough steam. It goes up again. How far did it go up? It went up this high, but it left a big tail on top. Now you're using some formations. You're like, it's showing me weakness because I see these big tails on top saying that there's pressure from the upper side. How far did it go up still? Now my trend line that used to be originally here simply got adjusted to here. Now, when I look at this whole move, I'm like, this is still in the 50% area. Okay? Why am I interested in this area? Because the sellers took it down from here before. I want to see why not again. When the price came back to this area, the seller started messing with it again. And what do you know? It moved back down. So this is playing with the whole flow of the market. Now, the tendency that we're all trained for to keep an eye out is this right here. Pick this. Pick that. Pick this. Everyone wants to pick the whole home run every single time. Okay, if you want to pick the home run, go work for a bank. That's how you will know the home runs, but then the bank will give you a contract saying you don't trade against us. Okay, or you don't take this knowledge and trade. So what do? You can't. So everyone's trying to pick that bottom and be like, oh man, look how much has moved, man. If I were to buy here and then start measuring and counting, like that's 130 pips. If I can only do that 3 times a month or 4 times a month, oh, that's awesome. That means 10 pips a day. And then all that stuff starts coming in. The regular thought process of a person, Okay. So how do we know that low is not a pullback from the high? Okay. Which low is not the pullback from high? You're talking about this whole thing up here. Well, you have to see, right? Take a look here. When does, this whole move up, you're saying that how do you know that this is not a pullback of this big move, correct? Is that what you're asking me, Conrad? Is that better? Okay. There you go. Sorry. Okay. Okay. Let me restart the screen sharing. See if that works. 1 second. Okay. Let me know when the screen comes back up, and we'll try this again. Now that question is very good, actually. Wouldn't the number and size of candles be indicative that perhaps the shorts are struggling to take control? Well, when you say the numbers, the number of candles, what does that mean? Okay, you have a point there, but I want to elaborate on that point. What does that mean? Okay. If you think about that point in the right way, it makes perfect sense. Okay, so when you look at this, now who here thinks this is a strong down move? Okay, this in fact is a very, very good move, very good strong down move, because everyone, we're focused on looking at right here. We're looking at this right now. We're looking at this many pips, it went up. And then it only came down this many pips. It's all number based, right? 500 pips up, 100 pips down. Don't think of it that way. Look at the way it went up. Buyers, then sellers, buyers and sellers, buyers and sellers. It's like they're taking turns. They're playing dodgeball. Okay, but then here, the sellers came in and said, no one comes in my field except me. And they just take control. Okay, look at the buyers just before. What could they do? Sorry about that. 1 second, my screen just popped. Okay, they couldn't do much. Just a small move up, and then seller just slammed it back down. So you're like, my sellers have control here. Okay, that's an indication right there. Okay, more than looking at candlestick patterns and this and that, that's an indication right there. And you need to look at that strength. That strength will give you a heads up of what's going on with the movement, with the flow. Okay. All right. So let's go through a checkup. Does everyone understand probing? Boyke. Now the three strategies, we're going through each one by one, right? I'm not going to just go ahead and give you all three in the beginning and then say good luck. Okay. About the last candle. Okay. Probing. What is probing? Okay. Let's check with all you guys. What is probing? Perfect. Perfect. It's a pin on higher time frame. Very good. That last answer is the best. Yeah. Okay. Some people call it a false breakout. So now let me ask you this. Is this piece right here a lower low compared to the one before? Okay. This is support right here. Yeah, there you go. It's a pin on a higher time frame. This right here, my friend, is a support. It goes like this. Okay, it went down, took a little bit of time, and slammed back up. Okay, same. This is what 13th November. Let's take a look. Here's your support area right here. It just goes down, goes back up. On the 4-hour chart, it looks like it's the same area, but on the 1-hour chart, it looks like the market actually went lower. It went lower. So when you see stuff like this, it's like obviously I can't be thinking in a sell mode. Okay. Yeah, it's the killing. That's exactly. It's really well said, Samir. It's the killing before market goes in the opposite direction. Yes, this is the third part. Is the final killing. Okay. Now, fib traders, 50% mark, sell. Okay, 50% mark, sell. Right? They look at this as a sell. And when you sell this thing, it goes in your way. It starts to go in your way. Okay, price action traders, stop loss above recent highs, obviously. Market comes up, shoots very strongly. At that point, when it starts to shoot, you don't see this tail. You see a big green candle the size of King Kong right here. Really big candle, all green. Stops you out. People start to think, oh my God, it's going north because it made a lower high from here to here. It stops you out. People reverse their positions thinking, I need to be in a long direction. Okay? Because the overall direction is north, and you start doing cognitive dissonance, which means you start making reasoning with yourself that, of course, this is wrong because this is the right way. And you start thinking it's a long. You get stopped out, you start buying, and then it just smashes right back down. Okay, because people are not putting focus on this major down move that we saw earlier. Does that make sense? Okay. Now, I mean, I see some of you guys are freaking out here about historic and stuff like that. Check out any of our previous FX Street webinars. We've done many trades live. You know, it's not a problem. So this thing happens all the time. So let's go through all those three things again. Okay. 1, stop outs that happen. Probing. Okay. Probing is very, very common. 2, the strength. This helps you understand who's in control. Are your sellers in control, or are your buyers in control? Okay. Would you say these sellers are strong? This whole area? from this area all the way down to here? You bet. You bet. Take a look. Once it came down, how much did it retrace? What kind of fib traders? What kind of percentage is this? 38, 24, whatever you want to call it. Did we go lower? No, we didn't. This is not a low. Remember that. Came down, spiked back. It didn't go lower. It's going up to test again. Where do you think it might possibly stop? Where your sellers are. Every time you have strong sellers somewhere, it will test back. It will test back. Once the selling is done, the orders are filled, it will continue. Okay? It will continue. Okay, support and resistance relies really heavily on this kind of stuff as well. Okay, people look at this as, okay, markets tested this area again and again and again. Okay, it's resistance. You know, it's tested this area again and again and again. It's support. You know, all that information needs to be to you is not the area where it's testing again. It's that price level around that area is important to somebody. That's why it keeps going down and again and again. And we have that hint when we see massive moves. Okay. All right, do that again. Why did it go back up after the break from 38.2? Well, okay. Let's review this. Okay. What's the flow of the market here? How are your highs doing? Are your highs getting lower or higher? Lower. What about your lows? What do you see? What do you see about your lows? Higher or lower? Lower. Once it starts to snap back, okay, in this strong down move, it starts to snap back, sorry, okay, and then it comes back down, creates a lower high, and starts to snap back down. What happens? Is it able to go lower? No. It's like, wait a minute, are the buyers coming in? Let's keep an eye. Let's see what's going on. It goes back up again to test. And this is when you start to see your candle formation. We're like, look at that tail again and again and again. It's coming at the same area. This is a 23% of this entire move. It's like, whoa, the sellers have really a lot of strength. They push it down again. Failed. Yet once again they failed. It goes up again to where the sellers are. And then it goes. Okay? If you were missing all this, it goes up again and then again it goes. Okay? And then here, you start to see the direction start to change. You are getting a lower high every time until you reach this area. Oh, sorry. Okay? You get a lower high every time until you reach the area where I've marked with my arrow. Sorry, can you guys see it now? I'm sorry about that. Okay, so you see how everything gets lower and lower and lower? Now, if we're trend line traders, we would look at it like, okay, this is a downtrend, it broke, and now it's an uptrend. Well, no, because when a trend line breaks, chances are it's readjusting. Conrad, I'm sorry, can you please repeat that? Repeat your question? I think there was audio problems at that time when you were asking me. I can go over it real quick. So does everyone understand how the highs are getting lower and lower and lower, and your lows are getting lower and lower and lower, and then you get your back door, okay, which is here. It's the first time you start to see it start changing direction. Okay? Does that make sense? How do we know they're in real time 23% it is? Okay, well, let's ask you guys this question. How do you know in any strategy when it's the right time? Okay, that's the thing. See, that's the thing. And that's why people have a lot of faith and trust in confluence, because they believe that once five things say yes, it has to be a yes, right? They stack up the odds like that. It's like, this thing says yes, this thing says yes, this thing says yes, this thing says yes. It's obviously got to be yes. 95% of the people are saying buy, so it's obviously a buy. Well, it doesn't work like that in Forex. We all know that, because 95% of the time people keep losing, you know? So you need to understand the focus that the way we are trained in the markets, it's a whole different way than what the experts, the way they look at it. They look at stuff. Okay? So probing, understanding where the sellers and buyers are. Okay? And finally, the false breaks. Okay? If you're getting ready for a long, okay, your indicators are showing you a long. You know when you're going to get a long? At moments like this. Take a look here. You know when your sellers come neck and neck with your buyers? This is the third strategy, guys. Take a look at this. You see your sellers here? And you see your buyers right here? Okay, let me know when you guys see those arrows, and we'll continue. They're neck and neck, right? They're neck and neck, side by side. That's the moment when you start to see this curve start happening, and everybody starts to think it's time. This is time. Let me pull up some oscillators here. This is time that the markets are churning around. These are going to be your oversold areas. Okay? What happens in these oversold areas, people look at this and say, hey, it's going long. They enter somewhere along this line. Usually it never happens before the fact. Everybody enters their positions after the fact, okay, giving them the not optimal prices anymore. Stop losses are kept below recent lows, recent highs, only to see the markets come down very strongly, to take them out and to make them think, oh, of course it's still down. The overall trend is down. And then they start selling. And then it snaps back up. So it's like double losses. Isn't that the best thing to fuel a market to go in a different direction? Is to take out the current players. If I want to make 10 million and I have positions, I have lots running in the market, I don't need to know a strategy that makes me money, because the money is not coming from the bank. It's coming from some other trader on the other side. So my goal is not to find the optimal strategy. My goal is to find out what you're thinking and top that. That's it. Okay? Everyone's in this myth that if I have the correct magic formula. No, understand the way people think. Majority of the market is trained in one mentality. Stop losses here, buy when it does this, indicators do this. You know what I mean? Okay? We need higher lows and higher highs first for confirmation to going long. Absolutely, Samir. Absolutely. That is very, very critical. And don't be afraid to miss the bottoms. Okay? When you have a higher high, higher lows, you won't get a trade right there. You know? Which is the optimal area. You won't get a trade there. But you'll have safety. All right, guys? So the final thing was, be careful from when your buyers and sellers go neck and neck, because that's the moment when divergence will start showing up. Your indicators will start acting up. Automatic trading systems, the alerts will start going off to buy and sell. Okay, Boyke, the problem with wide enough stops, you can use wide enough stops and you will be safe if you do that. However, that comes a problem with money management then. When do you know when to increase your account size? If your account size is, let's say, $10,000, you won't make it outside 10,000 going into 20, going into 30. That's about the range you'll stay in. But getting from 10,000 to 100,000, you won't know, because you don't know your risk at any given time. You have to keep your stops too wide. You don't know the risk. If you don't know your risk, you don't know how much you can increase your lot size in the future, if need be. That's the problem. You need to know your risk to be able to measure what needs to be done to grow that account. All right, guys. So I also want to let you guys know that over at Forex Watchers, we were completely booked out, but we are opening up extra seats in January. We're going to have 5 seats in January coming out. And thank you all once again for voting us to be among the top over at FX Street and coming at all of our webinars and stuff. Thank you so much, and I hope to see you guys in the premium section of FX Street. And we might also be coming out with a DVD with FX Street, so look forward to that in the next year at 2014. Thanks a lot, guys, for coming, and thank you, FX Street, for having me. Take care. See you.